What is going on? In this video, I'm going to be breaking down the #1 strategy that helped me grow my accounts, helped Mike here as you see, and also helped Wendy here grow and flip her actual funded account. And I'm gonna be breaking everything down in this video using absolutely no indicators. This is going to be the step-by-step easy guide on how you can trade, considering that right now at this moment, trading US oil, gold, indie indices, since the market is very volatile, this is the best time. So you definitely don't want to skip past anything, otherwise you're just gonna miss out on everything I'm gonna be breaking down. So let's go ahead and get straight to it. So like I said before, we're focusing on no indicators because we don't really want to use indicators for two reasons. It's lag, and another thing is a lot of these indicators, actually every indicator, is based off of price action or either structure. So it makes sense for us to be in front stone of everything before we actually just, hey, let's just use an indicator to get in a trade. So with this concept, or with this strategy, which is called my 3-man standing strategy, is very simple on how this works. This works when the market is very trending. This even works when the market is consolidating. But the reason why I said earlier in this video, you would definitely want to take effect with this strategy, especially now, considering everything is volatile, only mainly trading gold, oil, or indie indices, because trading these will get your account up to where you want to get it to because of the simple fact how volatile and how fast it moves in every session. It doesn't consolidate like a Forex pair does, but it is very trending, and that's what we're going to be using this strategy for, so we can grow our accounts very fast and rapidly. So first and foremost, you need to understand what is going on in the bigger picture. So this means anything from a 4-hour to a 1-hour time frame, you're only paying attention to what we like to call roadmap. Roadmap means you have to figure out the direction. Are we going up or are we going down? Or are we going sideways? Either way it goes, you need to understand what direction market is doing, because we're not here to go on a daily scale, the 4-hour scale, the 1-hour scale, to mainly look for all of these demand, supply levels, key levels. Because the thing about this is, as scalping with this strategy, if you were paying attention to a whole demand zone level, right? Let's say we're analyzing the market and we're like, oh, this is our daily zone. And then for whatever reason, you're on a 5-minute time frame and you're like, well, since this is my daily zone, I'm not going to, let's just say, buy it here or sell it here, because of the simple fact this is my daily zone. The daily zone, the 4-hour zone, the higher time frame zones do matter if you understand how to play it smart and play with it depending on your strategy. But for this strategy, you do not have to worry about that, because of the simple fact what we're focusing on is the bigger picture, which is the roadmap, and we'll get everything else figured out. So let's say that we understand the market is going up based off a 1-hour scale and on a 4-hour scale or whatever. So what we're now going to focus on is finding the most recent range. This is the biggest question I get asked a lot, meaning that figuring out what is the most effective structure or the most effective trend to focus on. The problem with today is traders is they draw Fibonacci, or they believe that this whole entire trend line is what they should be paying attention to. And this is what I mean. Let's say this is a 4-hour play and you're like, well, I have a daily or 4-hour demand zone right here. Or you're like, I also got a 4-hour demand zone right here. But once again, this is the 4-hour. We're going to enter off trades on the 5-minute, 1 minute. But you're like, I'm looking on market to come here, or you're just waiting on market to come here. And you realize it never does. Reason being is because you're not focusing on what's irrelevant right now for market, right? Every time frame has their own story. Also, every trend has their own time and story for when it will actually play in effect. We focus on what's relevant now. And this is why I went back to what I was saying earlier, why I do not use the 4-hour and the daily to find daily 4-hour demand zones. I don't. I've been doing this for the 2 years now, growing accounts, teaching others how to pass challenges and teaching others how to flip accounts and have really good high win rates. Like I showed you earlier in the video, Mike here is a prime example, just basically taking over with these amount of wins. That's because we're focusing on what's relevant now, and we're not getting too caught up in all that extra noise that everybody gets caught up in, because they have 5 different trend lines or 20 different support and resistance lines, and they don't know which one is valid. They don't understand which one they should focus on. See, we ain't got time for that. That's why I'm showing you guys this here, and understanding you need to focus on the most current trend. Say that we have our trend, which is once again the most current trend, which is this here. And like I said, the best way to identify what's the most recent trend is looking at previous structure. So if we had a previous high right here, and the moment that market broke through that previous high, wherever that most recent low is at, that is the starting point of that trend. And that is the starting point of that range, is what we call it. Starting point of that range, where you will want to then start your Fibonacci, your supply demand levels. Look for anything within that starting point. Now that we got the starting point, the next question we need to ask ourselves is, well, where's the ending point? So the ending point would be wherever you see the most recent low, which is this, and the moment that it breaks through that recent low, and this is all on a 1 hour scale, 15-minute scale is what we're looking for. The moment we look for structure to break through this most recent low, now we have the full completed range. And then this right here is where we can then now draw Fibonacci from this point to this point, right? We're not drawing it from here to here, or we're not drawing it, let's say, extended further out all the way down here. We're not looking for all the demand zones down here unless we were trading this completely different, like a swing trade or something, or unless structure broke, which is something we teach on our YouTube and also on our live stream. So make sure you subscribe if you haven't already. But the beauty is we're only focusing on this right here. We're trying to understand, where is market at? Is market going to be 50% in the equilibrium balance of this range? If anything under 50 is what you want to consider valid. That's what you would consider valid. So if we're looking at this most recent range, not this one, remember, we're not focusing on this one, we're focusing on this one. We want to find valid ranges, and anything under the 50, that is your true demand level. There's no such thing as, oh, this is my only demand. No, that doesn't exist in reality. Anything under the 50 is the balance of life, the balance of the world. You want to, that's when you would then want to go ahead and look for any structural level you hear on YouTube: demand levels, support levels, resistance levels, POI levels. What I like to call is POI levels. Extreme levels is what we call it. But you're looking for market to come anywhere under here. And then from here, how do you ask? Well, ask yourself this question. Well, where would you put your levels? Wherever I see a little consolidation. So meaning wherever I see an internal high or low under the 50, I just mark it as POI. The reason why I call it POI is because I don't want to get too caught up in calling this an order block, while somebody else said, well, that's technically supply. What I'm getting at is it's a level of interest, and I'm considering to enter once market hits here. The moment market decides to hit here, I then and only wait on momentum to tell me the buyers are in the market. I don't do limit orders. I don't do any stop orders or anything like that, because we still 100% never know, based off of this way of trading, what's going to happen. But the whole time of me showing you guys this, everything you look for is off that 15-minute. 5-minute is where you look for your actual entry, or even the 1 minute is when you look for your entry. So we're just keeping it simple, we're keeping it a bug with you. All we're going to do is look at the momentum. Once we see momentum is shifting, meaning that we're seeing double bottoms, this is when you start looking for double bottoms, only when it hits the POI level. Triple bottoms, inverted head and shoulders, that is now time to enter, in the stop losses here. Now guys, if you liking what you're seeing so far, I need y'all to do me one favor, comment down below, say drop more like this, because this is valid information. But let's go ahead and show you guys in the actual live charts how this actually looks. All right, so now we're physically in the live chart, and I'm showing you guys this with oil. Like I said before, oil, gold, US 30, NASDAQ, S&P, any commodities, any indices is the actual assets you would want to be trading with this strategy, because with Forex pairs, you tend to have more consolidation than anything. If you don't believe me, go on a daily, go on a weekly, and go on a yearly scale, and you will see that the incline, the volatility is 20 times more valid than Forex pairs. This is why we trade only these, because this is how we grow our accounts fast in 2 weeks. As you see here, we have an hourly scale showing that the market is going up. Trade what you see, not what you think. Clearly, there's nothing telling me to sell, and I'm not looking to sell. I have no RSI, I have no moving averages. We don't need that, because that's going to throw us off. I'm pretty sure the RSI or the stochastics be like, yes, overbought, let's sell it. So now that I understand the direction, if you're having a problem figuring out what direction is going, draw out your trend line. Just really connect the dots and figure this out. But it is going up. Now here's the problem. As a trader, we're focusing on all of this, right? as a newbie. We're like, damn, I think this is where market needs to start and go. So all right, I'm gonna draw my demand here, or POI, or the blocks here. All you want to do is, like I said, 15-minute is kind of where you want to start doing your actual technical marking up. In your 5-minute, we're focusing on the most recent range, because with indices, with commodities, you notice, especially with NASDAQ, you notice how it does this, and everybody's looking for a pullback here, but it goes right back up, and everybody's looking for a pullback here, but it keeps, because they're focusing on the little internal structures inside, and that's what we're talking about here. So if you look here, we got a high and we got a low. So all I'm simply trying to do is figure out balance in between this, and you can do this by simply eyeing it, or you can take the fibs out, start it from the beginning of the range. Now, why I'm breaking this down, why is this the beginning of my range? Is because this was the most recent high. We broke through it. So this is my starting point. This right here is the most recent low. We technically broke through it here. So now this is confirmed that this is my range. Now I understand the moment. So all I'm doing is drawing out my fibs from this low to this high, and anything under the 50 I'm interested in. Now I have an area of 50 and the 618, which are like my gold mine levels. That's kind of like the target point, but I'm gonna just mark this here for now. And then I'm gonna go in the 5-minute. For anybody here that trades fair value gaps, you can probably look at this as a fair value gap, literally right here. Regardless, they all can align if you understand the whole value of supply demand, but we're just gonna use this area because we're just using the fib for this example. And if you guys want more, just subscribe to my channel so I can get more detail with this, and comment so I know y'all like this. Let's just go ahead and play the waiting game. So we're just simply going to play the waiting game. Along with that, we're just going to get ready for a possible entry. So sometimes what happens is if market never comes to this area, then that just means you don't take a trade. That's another problem. We tend to have the fear of missing out on opportunities when it doesn't present to us. And sometimes we got to understand we need it to come to these levels. Otherwise, it shouldn't be a trade. It's just like a business opportunity. If you know this opportunity isn't good, you ain't gonna do it. So it's the same exact play here. We gotta wait for the opportunity to be presented to us. So we're just gonna wait for either market to get somewhere in there or close to in there. So now we noticing that market, I'm on a 15-minute, but I like to trade this off the 5-minute. So I'm gonna jump on the 5-minute. But now we're noticing market is tapping it in this area. It doesn't have to be perfect because the market is never perfect. The word is never perfect. But we just need to know that it's here. Now that I'm on a 5-minute, all I'm waiting to see is structure, known as basically a high. And the moment we break through that high, that's when I start to get interested in it, right? So we broke through this high with this little move here. However, I'm waiting on another settlement, another candle to confirm that it's a buying market. And the reason why I wait on this is because sometimes this could happen, and I'm not sure if it's going to happen, where it goes up and it goes all the way down, right? We want to make sure we're safe than sorry. What we're going to do is still wait because we don't have the setup yet. And boom, candle right here. This is the candle we enter. Now, I'm not here to talk about stop losses really, because that all plays a part with your risk percent. So I'm going to just be casual with it, and I'm going to just keep it below where I have marked my fib points. And then our first target will always be where that high is at. So we can always target it here. I honestly do get tighter TPs, which is these levels here. Like I said, I'm not here to talk about where to put your TP levels and all that. But what I am going to tell you guys is you can always draw your fibs from that starting point to the end point, and wherever your Fibonacci 27 negative 27 618 is at, you can also TP it all the way up there. So as you see, we basically smashed TP1, TP2, we can say TP3 and TP4. So this is literally, once again, the strategy that I use and that I'm using right now to grow my $500 account, which is currently at $5,000. And if you don't know how we're doing this, it's literally all my live videos. So make sure you tune into my live stream because we're doing this live with the same 3-man standing strategy concept. Also, the same thing I teach in my boot camp, more in details. With Wendy, as you see, she passed her phases. And then also Mike, he's doing a wonderful job with doing these strategies as well. So if you guys want to be a part of the community, link is in the bio. I appreciate y'all. Your boy Solo. Comment down below if you want more like this. Your boy Solo. Once again, I'm out. Peace.